known. But my advice to you is don't take notes. There's no need to take notes. During the presentation, my objective to you would be, if leaving this room, you can get hold of a few concepts about what is contractor bonds. That would be okay. The important concepts. So next time you come across it, you know what it is all about. And because there are so many variety of bonds, I don't think you can get into detail knowing them all. Okay, so that would be, promise me, if we are here for half an hour, we try our best to enjoy that period, and then I try to emphasize when I come to points you need to know. Otherwise, it would be very boring. I read out sentences, and you do not know where I am. Okay, Joe. Now, I first explain, I'm not talking about bonds in general, because bond as a guarantee would apply to different commercial transactions. You go to tender for not necessarily a construction job, a surfacing providing tender, chances are the principal will require bonds. So my emphasis today is focused on contractor bonds only. Okay? Contractor bonds only. So don't challenge me and say that, wow. I repeat, there could be many bonds. Even if you are tendering for a government cleansing contract, you need to provide a bond. But my one is only about contractor bonds. So this is self-explanatory. I don't know, now I'm not a lawyer, but I know roughly a bond's intention is for the principal to make sure the service provider, in this case the contractor, will perform. But how effective it is a matter of law that I don't know. And as I go further, I try not to give you theories about bond. I try to give you the daily examples, practices about bond as we arrange it. So his obligation under the contract. Normally, I may be repeating this message. The person to provide the bond is actually a third party to the contractor. So there must be something that third party is happy with the contractor's capability or the ability to perform the bond, so that third party will provide a bond. In Hong Kong, most often, contractor bonds, as of today, are still provided by banks as a financial facilities to the contractors. So my impression is that taking out contractor bonds from insurer is not well developed in Hong Kong. It's not common. It's not common. But this is a necessary evil in a contractor's business, because a contractor's most important moment is payment by the principal to him for his job done under a contract. So normally, production of a bond to the principal is a precedent to payment, a condition to payment. If you don't have a contractor bonds issued by a third party accepted to the principal, normally payment will be withheld. So I'm saying that this is a necessary evil. This is whether it's not whether you need it, you like it or not. You need to have a bond if the contract is so written. Yes, we can go on. This is a cost item. Because if you want to get a bond from a third party, you need to pay a premium. normally it would be a certain percentage of the bond amount. So this is a cost item, and this is a very sophisticated subject, because if all contractors are tendering, and if this is one of the cost item, that would become a very important item to them, because each and every contractor are trying to control their costs. So this is a cost item, you need to pay for that. Am I going okay?
Yes, perfect.
Okay.
No
Let me
worries.
know if you say I'm too slow, I'm too quick. So normally in Hong Kong, banks and insurers are the normal sources of bond. I would argue that it should be the banks as a facility to a contractor. So, you know, throughout this presentation, if I miss it, I now draw your attention to that. A bond is something for the cash flow of the contractors. And cash flow is the life blood of a contractor. A contractor may fail if he doesn't have a good cash flow. If he has a good cash flow situation, they can tender more jobs. But if they are suffering from a very poor cash flow situation, their capability to develop the business will be limited. So this is a cash flow instrument for the contractor to compete. So this is an important subject to the contractors. In the United States, typically, well, I'll try to be quick here because we are not talking about the United States. It's from the insurer. Europe makes UK, Now this one is important. A good bond facility protects the credit lines with banks. So if you have good relationship from insurer, you can always keep your banking facilities for some other better uses. That means you are enhancing your cash flow capability. So if you go to see principals, we go to see contractors trying to sell a bond, we don't go to the project manager. He doesn't bother to know you. But if you go to the finance director, he would be interested to, come in, Mr. Lee. I can give you 10 minutes. How much you can arrange bond for me? Because it's for the financial contractor to understand cash flow. So this is one important to know, that even today we are coming in to talk about insurance. A bond is not an insurance. All insurance we talk about normal, not life insurance. All insurances we know are talking about specific event, accident. But in a bond, there's no happening of an event. There's no accident. It's a guarantee. So if the principal is not happy with the performance of the contractor, he can make use of the bond and ask the third party to put him in payment. So this is not an insurance. So there are different types of bond. When you want to tender for something, well, in order to prevent you from being nasty, you put in an unrealistic price and disappear, you need to have bid bonds. This is the major part of the bond, which is performance bond. Guarantee the contractor would perform during, well, to ensure completion of the project. This is the normal bond we are talking about. And subdivided, you have bonds called on-demand bond. I'm not going today to dwell too much time on what is demand bond, what is conditional bond, but performance bond. And you can arrange one bond fund for one project, or you can, with insurer, you can arrange an annual facility. The situation in Hong Kong today is all government procurement direct government procurement, there is no requirement for performance bond. No. Quasi-government department like MTRC, Airport Authority, or some other statutory bodies, they got bonds in their contract for the contractor to arrange. Normally, it will be 3% of the bond amount, of the contract sum, 3% of the contract sum. So, but in private world like Swire Property or Changgang Hutchison, they normally would ask the contractor to provide a 10% of the contract value as bond, which could be quite a heavy cost item. But as of today, I would like it to be better, but the case is really, it's not that common. There are only a few insurers in Hong Kong. They are providing of bonds, but please understand there are such a wide variety of bonds. Well, the trend is something like that. Just like bankers, like it or not. The better your financial situation, the better will be the bonds terms. So if you are rich, people will rush to you to lend money to you. But if you are small contractors, your balance sheet is not that strong, you might have some problem buying very expensive bonds from the bank. This is the situation. Normally, this is not very well developed in Hong Kong, but for most of the bonds issued by insurers to enterprises are those listed companies in Hong Kong, because the underwriter can go to the internet and find out their financial position, and there's a disclosure sort of requirement for public listed company. So theoretically, the underwriter can form the computer and try to know the contractor's performances. The famous contractors in Hong Kong, they certainly have bonds facilities from insurers, but not for the small contractors. So this page, I will try to be very quick. So just go. So the underwriter, theoretically speaking, will try to know something about the contractors. But this is really academic issues. But actually, some insurers are so hungry for business, they do issue bonds to contractors without seriously analyzing this sort of information. It's Hong Kong everything is super competitive, and insurers are very keen to get business from the sound contractors. Can you go on, Joe? So as a contractor, I don't know which department you come from, but if you happens to be later working for a contractor, you have to show your company is having consistent profitabilities, strong, stable management ownership, sound business plan, contingency plan. In those old days when we arrange contractor bonds, the underwriter will ask the insurer, what happens if there's something happen to the company? Do you have some contingency plan for what? To survive. Because if the contractor cannot survive, it will go bankrupt and the bond will be called by the principals. That means he cannot be able to perform his contractual obligation under the contract. Now this is the most difficult part of the bond arrangement. In a bond arrangement, you have a we call indemnity regime, whereby one hand the insurer issue a bond to you, but concurrently, the contractor will enter into an indemnity agreement to the insurer, holding him harmless if the bond is called. The indemnity agreement is very legalistic, very serious, very onerous on the contractors. Anything the insurer believes the bond will be called, he will invoke this indemnity and ask the contractor to put them into fund to protect his case in case. But this is very legal. I'm not going to sign. I'm not going to waste too much time on this subject. But normally, the as well as the price of the bond, trying to work out a indemnity regime for a contractor is a difficult subject for brokers and for lawyers. So today we are not going to waste too much time on this subject. Simply, I want to say that this is the backbone of a bond facilities. So the insurer will give you a bond guaranteeing you, but he would like to have a counter indemnity at his file. Anytime he can use it to protect his position. And each and every indemnity are onerous, and it needs to be negotiated, deleted, amended, so that one instrument could be accepted to the insurer and the contractors. Particularly for some contractors, if they are listed company in Hong Kong, this sort of instrument will have to go through their legal departments. So it takes time to negotiate. All I can say is, so many times I fail to conclude a bond business is because of the indemnity wording. They come to a situation where both parties cannot agree on the indemnity wording, and there's no bond. So if you want to arrange a bond, you need to have a dedicated person, and he's in a position to negotiate. Normally, the person I come across to handle this bond situation is first of all the financial director. Normally, my next person to handle it would be the company secretary of the company, because he really knows the company. He really knows the listing laws of Hong Kong Exchange, because he's trying to agree with your indemnity, but on the other hand, he has his obligation to protect the shareholders without entering some too onerous agreement with the third party. So this is quite a difficult subject here. Project bond is easier. Annual facility is more complicated. By annual facility is the insurer will give you a revolving facility, say 200 million per year. So in that year, all the jobs can be covered. So you don't need to negotiate each and every bond with the insurer. So this is so much about contractor bonds. Any questions? Any questions? Then we will move to a different subject about contractor risk. Joe, you want to present? Okay? You present this? Okay. So any question about bonds? So can I know which department you from? Is it related to contracting? Construction? Okay. I think sooner or later you will come across this issue in your future career.
Okay, may I introduce myself? My name is Joe Lee. So anything you want to ask, anytime you can ask. Anybody know about what is insurance? We just talk about bond. Insurance is another topic. Okay, do you know what is insurance? Apart from life insurance. Do anybody come across insurance before? No?
I'm sure you do. If you drive your car, you
You
need
should
third-party
need-
liability insurance.
Yes, if you have a car, you need a motor insurance.
If you happen to have a Filipino or Indonesian domestic, hey,
You need the
take out
insurance.
employees compensation.
Yes, a compulsory, obligatory, statutory required insurance. This is compulsory employees compensation insurance. So do you know what is insurance? So insurance is a contract between insurer and the insured, that is the client, in the event which the policy states happens, the insurance company make indemnity to the insured. Okay, this is insurance. So there's some principles behind insurance for each and every kind of insurance. First of all, is good faith. What is good faith?
我的背包放嘅，我嚟嘅時候好似有個。
So at insurance law, I can tell you, I studied insurance in Hong Kong Polytechnic many years ago. Okay, so I graduated from insurance course. So I've been in the insurance industry not as long as John, and I've been handling claims and placement for many years. So good faith in insurance law is called utmost good faith. So because when underwriters or insurers have a risk to consider, they do not have all the information in hand. So what the law says is, for all information regarding the risk, the insured has a duty to disclose. That is called utmost good faith. So anything the insured think it will affect the underwriters or insurers to consider risk is called the material fact, and which has to be disclosed to the underwriters. So this is utmost good faith. But during the development of the law in recent years, for some personal insurance, just what we discussed is domestic servant insurance, motor insurance. What is required is, if insurers provide you a form, you complete the form, disclosing all the information in the form has fulfilled the duty. Okay. So proximate cause. What I mean by proximate cause? So the insurance contract insured a particular event, for example fire, for example water damage, for example typhoon, windstorm and flood. Okay. So what is a fire? If a fire occurred and the sprinkler burst, the overtop sprinkler burst, causing water damage to the floor below. The floor below, the property below this floor, this level, sustained water damage. What is the cause of the incident? Is it a fire? Is it a burst pipe? Is it a burst sprinkler? Or what else? So at law, this is a term called proximate cause. If an event which is there's no broken, is a change of event which is unbroken. The change of event is unbroken. The cause of the change of event is the proximate cause. So the example which I cited, that is the fire, activate the sprinkler and it cause water damage downstairs, causing water damage. It is not a sprinkler burst, it is a fire. So if the policy only insured fire, but sustained water damage, then the proximate cause is fire, and it is insured under fire policy. Okay? This is an example.
Oh, sorry.
It's okay. So every policy has to have insurable interest. Again, what is insurable interest? Is it a bad thing? I insure policy on your life. Is it just a bet? I place bet on, for example, Queen Elizabeth II. What time when I effect a life insurance policy for Queen Elizabeth II? Okay, if she dies, I get the money. Is it a life insurance or is it a gambling? Can I effect a policy for any one of you here? Can I? No. Why? Why I cannot effect an insurance policy for, say, John? I cannot at all. Why?
Because if I die, there is no relationship of financial loss to Mr. Lee.
Yes. So what we call is insurable interest.
But if I insure my car, if my car is damaged, I'm going to suffer from financial loss.
Yes.
So I can insure my car.
Yes.
But I cannot insure Mr. Lee's car.
Yes. Because I'm the owner of the car. Okay. I can insure my wife because we have close relationship, which because of her death, I will suffer financial loss. Okay. I can insure my own life. Okay. So this is insurable interest. So every insurance policy, if you are going to effect an insurance policy, there must be insurable interest before you can effect an insurance policy, before insurance company will issue a policy to cover the risk. Okay, indemnity. Again, to distinguish it from gambling, there's the principle called indemnity. Insurance only will place the insured in the situation immediate before the loss. So, for example, for Polytech, the building cost, say, 100 million Hong Kong dollars. Is it able for Hong Kong Polytechnic to insure the building double the cost? No. Even if it is insured for such a sum insured, any losses occurred will be, any loss will be payable up to the value of the building itself. Of course, there's a different kind of valuation under the policy. Reinstatement value, new for all. What I mean by new for all is there's no deduction of the depreciation. Market value, that is, the value of the building at the time of the loss after consideration of the depreciation. Okay, there's a lot of different measurements which can used under the policy as an indemnity. So if you effect two policies for the same amount, even for the same amount, you cannot claim double indemnity. So, of course, for insurance to be payable, the insurer has to prove the loss took place and loss damage and loss and damage sustained, because the onus of proof of a damage is on the insured.
Can I go next page?
Okay.
No. You present.
Okay.
But I go next page. Now, this part, I would like to do this part, only this page.
No, John handles contractor always from his beginning of the career, so he's more familiar.
Insurable interest is quite an abstract concept, but there could be different insurable interests. So I'm not a lawyer. I'm not going to talk too much, because since you are from the construction department, I give you some examples in the context of construction. Now, I think you guys all know what is a construction contract, and under the construction contract to the contractor, other than performance of the project, is the concept of responsibility. And in the construction contract, it would become an indemnity to the principal. You should know that. That means I allow you to carry out a job for you. If you happen to sustain any loss to the project, either to the project itself or to a third party, you are going to indemnify me as an owner. Now, take as a daily cases, your house is going to, your flat, you don't have a house these days in Hong Kong. It's going to have a renovation. You give the key to the contractor. Now, theoretically speaking, the contractor is, before he handed over the flat to you, he is in charge of the flat. When you are in charge of a flat, you are under total responsibility. anything happens, somebody gets in, get hurt, somebody gets in, takes something away, you have to be responsible, the contractor. Anything losses, you will ask the contractor to indemnify you. So when you go to an a construction contract, you will see sentences like care of works, indemnity to principal, and statutory requirement. So when you are responsible to pay somebody back to compensate him under a contract, then it creates a insurable interest. This is the subject of today, contractor or risk. So a contractor will have an insurable interest to insure his contract. So this is one example. Wow, we've been talking about insurable interest. It could be ownership, right? It could be a relationship, a responsibility, an obligation created under a contract. Okay, so insurable interest is quite a number of insurable interest actually comes from contract, common law contract. So insurer will recognize your insurable interest provided it's legal under a contract. So if we turn our attention to a different participant in the project, the principal also got an insurable interest in the insurance because his investment, which is money, is at risk. What about if there's a fire? That project will be gone. So he has an insurable interest to be at least, if not take out a separate insurance, to be named in the same policy. So in the same policy, I'm trying to tell you, an insurance policy can cater for different insurable interests of the same project. And in this case, the principal has a different insurable interest with the contractor. The contractor's insurable interest comes from the contract. The principal comes from his investment. But there could be some other statutory requirement. The principal will need to take out insurances. For example, in Hong Kong, under a contract, you might have an occupier's liability. Then you can take out a CAR insurance because a CAR insurance Section 2 will provide third-party liability. But finance parties, the banks, they all have their insurable interest in the project because they advance a loan. If the project frustrated then their loan is at risk. So it's all reasonable, legal, and permissible for banks to be named in an insurance policy. So if your guys, well, I don't know, in my old days, when I want to buy a small flat, I go to the bank for mortgage. That means I'm asking for a bond. Typically, you will see that the bond will add his name to that insurance policy because he's also got an insurable interest in the policy. So I'm going to stop, but I just want to give you some examples of what insurable interests are all about. But this is the core subject of insurance. Without insurable interest, there's no insurance. Okay? But this day we now have some owner control, but we are not trying to spend too much time here. I hand it back to Joe. Joe is a better presenter.
Okay, so John has explained more about the insurable interest. For the insurance arrangement, because there's different parties have different interests in the project. The contractor has the interest in the project. Owners has the interest in the project. So nowadays, more and more policies, insurance policies, are being arranged by owner rather than by the contractor. Particularly for the government project or other statutory organization, the insurance are arranged by owners. So we call it OCIP. This includes MTRC projects. For example, the recent Sha Tin Central Railway, which are handled by our company. The airport third-party runway. Third party runway, sorry.
runway.
The third runway. And also Disneyland theme parks. These are all our clients, okay? So these are all arranged by owners, and they arrange owners control insurance program. So apart from the contractor or risk policy, they also ask us to arrange owners control employee compensation insurance. So it is the not contractor arranging the insurance, but the owners arranging the insurance. There are advantages for owners to arrange insurance, but I'm not touching this in this presentation. So under insurance policy, there are limitations. First of all, is the period. Now, under CAR policy is contractor or risk policy, okay? So we all often call it CAR policy. Under CAR policy, there's construction, there's the period of insurance. Every insurance policy has an insurance period. For example, motor policy is an annual policy, so you have to renew it every year. For employee compensation policy, nowadays they're 2-year policy sometimes, but most of them are annual policy. For a CAR policy, normally the period of insurance will be the contract period. Be it 2 years, 3 years, 4 years, the period is the construction period of the contract.
The reason why we mention period as a limit is most often than not in Hong Kong and in Macau, where I come from, most projects will have a delay. They will be delayed, and because of the political issue, so one of the limitation is the insurance period. So you got to be very careful when the project is being extended, like every project in Hong Kong. So you need to be careful about a policy will not be extended automatically. So there's a limitation. You have to look after that.
Apart from the contract period, there usually has a defect liability period. Normally for after the contract period, there's a 1 year or 12 months DLP, to be covered under the policy period. And the other is the limits of indemnity. The limits of indemnity normally, again, is stipulated under the contract. And nowadays, it's usual to have for third-party liability under the CAR policy for a limit of 50 million Hong Kong dollars.
50 million.
Yeah, 50 million Hong Kong dollars for limit. So, in the event of loss, the limit underwriters will pay. For example, for the example I just cited is 50 million Hong Kong dollars. Everything more and over and above that 50 million Hong Kong dollars will not be payable under the policy and will be paid by the.
Is it mean by per occurrence?
Per occurrence?
Limit of indemnities per occurrence?
Yes. Normally it is per accident.
Per accident.
Per accident. That means by per occurrence, not per claim. There are some policy which are per claim. The limit is per claim. Or the deductible is I'm not mentioning here. The limit is per claim. But normally it is per occurrence or per accident or per event. Okay. So occurrence, there are also legal definition on what is occurrence, event, accident, but I'm not going to explain here. Okay. So again, other limitations that I'm talking about all risk insurance. That is all kind of risks, accidental damage or accident is insured under the policy. But there are other limitations, for example, for conditions, for exclusion, for limitations. Each policy incorporates all these conditions. If you are in breach of this condition, then there's no indemnity payable under the policy. So one of the conditions is you have to cooperate with insurers in the event of a claim. Okay, if you're not giving cooperation, then the policy will not be operative. So this The independent contractor is not an answer to all liabilities of the contractor who has his contractual obligations under the contracting contract. Why is it there? Because the contractual liability is one of the exclusion under the insurance policy. So why? Why is it an exclusion? It is not covered under coverable under the policy. Anyone can suggest? Give a suggestion.
You should have done all the preventive measures.
Not exactly. Not exactly. Because contractual agreement, you can agree anything under the contract. For example, in the event of delay, there must be damages, right? There must be liquidated damages under the policy. Not under the policy, under the contract. So, but this is not insurable. Why? Because the liquidated damages is agreed between the two parties. That is the principal and the contractor. So it will be maybe sky high, right? It is not legal under the legal system that or common law legal common law. This is not a common law that the contractor has to pay. What they are has to be paid under the law is that following an accident, for example, under liability section, following an accident, the person slip and fall, and it is going to pay, say, what we call PSLA, PSLA, personal PSLA.
Personal injury.
Personal injury. Therefore, personal injury, there's a calculation under the law that according to law, you say pay 10 million or 5 million Hong Kong dollars. Then
Contractual liability and common law liability, they could be overlapping.
yes,
But they are not exactly the same. There are some differences. Because Hong Kong is famous and practices common law. So all contracts are based, insurance policy are based on common law. So it is independent for your obligations you assume under the construction contract, which is pre-agreed. Common law is when something happens, let's talk about the damage, not pre-agreed.
so what I said, I just remember PSLA, we are always talking about the jargons, okay? PSLA, in the case of personal injury claim is paying PSLA, pain, suffering, and loss of amenities. So PSLA has some form of calculation in all the case judgments. So just in case of a third-party bodily injury claim, underwriters or insurers will follow all the case judgment or case precedents to calculate the claim payment. And it is not agreed under the contract. It is under the law system. So insurers will know, just in case of a personal injury, how much they are going to pay. But under a contract, you can agree whatever you can, between the two parties. So for contractual liability, underwriters will not follow, will not be indemnifiable under the policy. Okay. So I'm talking about the cover of the CR policy. So under the CR policy, there are usually two sections. John just touched a little bit about that. Under one of the section, which we call section 1, is provide covers for material damage for the project. So what is material damage? Physical damage. Under a CR policy, the physical damage is works and temporary works. You know what is works and what is temporary works. You should know more than me, right? Yeah. So material damage covers works and temporary works. So the policy, which is called the all risk policy, cover all accidental losses except those excluded. So the usual exclusion under in fact, most of the policy has such a kind of exclusion. What is excluded? War, civil war, sometimes riot and civil commotion, okay,
Nuclear.
nuclear activities, earthquake, no, not in Hong Kong. It's in China, okay. The China policy is a standard exclusion for earthquake for China because China is so huge, from the western part and northern part, there's so many earthquakes. So if you ask for earthquake cover, they will extend. But this is the standard exclusion under the China CAR policy, but not in Hong Kong. In Hong Kong, there's no earthquake exclusion under the policy, okay. But war risk, sometimes civil commotion, riot and civil commotion. What else?
Terrorism.
Terrorism, yes. Terrorism is excluded.
Data reading failure.
Data reading failure, what we call Y2K exclusion.
This
Okay.
is even though this is physical accidental, insurer will say we are not going to pay this because we don't understand what it's all about.
They
Data
don't-
reading failure.
Okay, I just said that in the previous slide that I said that owners of proof to prove to say accident occur and causing damage is the insured duty. But under ORIS policy, if the insured has already proved that there's a damage caused by not an exclusion, if the underwriters would like to decline the claim, it is the duty of the insurers to prove an exclusion applies. Okay? The owners of proof, okay. So the duty to prove the accident occur and causing the damage is on the insured. But to prove an exclusion applied and to decline the claim, it is the duty of insurer. Okay. So this is the construction of policy. An accident occurred causing physical damage and physical loss and damage, and the exclusion and conditions are part of the policy building. There are a number of usual exclusion. We just cited a few exclusion and conditions. Just cite one, which is you have to cooperative. And there are all other conditions. For example, if you arrange two policies, how it is to be handled. This is also another conditions.
I would like to present this slide. This is only, I just give you some real life example. So is constructional plant and equipment covered under a CAR policy? No, unless you have a separate sum insured. Because the principle is under the contract sum is something to be built will become the permanent part of the project, it will be covered. But constructional plant and equipment are something movable. The contractor can use it for project A. After project A finish certain process, he can use it and retain it and move it to project B or C, like foundation equipment. So they are not the subject of the CAR insurance, unless you have a particular section to say that I have certain constructional and plant equipment there. So that's a, Joe has challenged me, why you ask, you put in so many questions up here. I just want to give you some example. They are not covered. So workman's personal effects. So you bring in a Rolex, a very expensive watch to the construction site. Would it be covered? Normally it's not covered because this is not part of the contract value. This is not part of the contract assets. This is only personal effects, okay? So if you won some money from Jockey Cup the other Sunday, you as a worker, you brought your cash into the contract site. If this is being stolen, it's not the intention of the contractor office policy to pay for personal effect. This could be covered, but this is not covered. Why? Because I just want you to remember a few words. 5 word: accident, physical loss, damage. But if the cause of delay, cause of overrun, they are not accident. They are poor management. There's no event. There's no physical loss. So this is not the intention of the policy to pay for this whole thing. So just catch a few words. Is there an accident? Is it physical loss? Are there damage? So these are not the subject of a normal construction or risk policy. So blockage of access to site. You are building something at the remote part of New Territory. After a heavy flood, all the roads are blocked and you cannot access the construction site. You can incur some money, but I think I don't want to waste your time. But Joey and I been emphasizing the word directly caused by an event. You can argue it is not directly caused by an event. Flooding may not be, could be one of the reasons for the delay, may not be the only one reason. A fire that damages a building is direct, it's the proximate cause, so insurer pay for that. But delay, it could be many reasons for delay, even natural, holding up money for approving projects, it could be delayed. This is not the subject for insurance. Noise pollution to third parties. Why noise pollution to third parties is not an insurance subject? It happens daily. It's not an accident. So if a construction site you have noise pollution, it's daily. It's not an event. And it's very difficult to prove damage. This one is too complicated. I'm not going to spend too much time. Normally, if for some design error, contractors normally would incur some damages to some temporary work, and these are not covered. So, in any event, I try to say indirect effects. Those things you cannot prove is direct related to an accident. Normally they are not covered. Normally they are not covered. If we build another new premises at Polytechnic, and in order to build the foundation, we happen to damage one of the cables supplying electricity to Tsim Sha Tsui East. So the whole area suffer from a closure of business during the Easter holiday. It could be quite a big financial loss. But it's very difficult. Tsim Sha Tsui East downturn in business is solely due to this damage of the cable. Then there's a condition in the insurance policy not to pay those claims. Because there are so many reasons. It could be some why, or it could be something happening in Tsim Sha Tsui East that night. So it's, even though it's a result, but it's not a direct result. So I will pass it back to Joe, because Joe would need more time to talk about the true moment of an insurance policy is claims and payment of claims. He will use more time on that subject as a practitioner.
So I just mentioned about the under insurance policy. There's two sections. The section one is for works, for contract works, and the second section, section 2, is for the liability to third party. What means by liability to third party is if the contractor or any insured party under the contract cause injury to third party, body injury to third party, or property damage, third party property damage, if it is proven to be liable to the third party, then underwriter will indemnify what the insured has to pay to the third party. Okay. Just for example, recent case in Chuan. Okay, these fallen objects from the construction site causing body injury to a passerby. It's fatal, yeah, it's fatal. So this is one of the incident which is covered by the third-party liability section of the policy. So, of course, it is obvious that there's something get wrong within the construction site, causing the object to fall down from the construction site. But if it is not an obvious incident, the cause is not obvious. Again, under the law, the onus of proof is on the claimant. For example, if water escape from the construction site and then causing, sometimes under the podium it is an early handover, phase 1 handover, it is occupied, and then the phase 2, the superstructure built on top of the podium, there's still a construction site above the podium, but the under the podium it is occupied. So there's an incident from the construction site above the podium, causing water leakage and then flood the entire podium. So if the occupier under the podium is going to submit a claim to the contractor above the podium, they have to prove the loss first of all, prove the causation. Okay. Sometimes it's very difficult to prove the causation, and it is necessary to have some report from some of the governmental organization to give a hint on what had happened. Yeah. So against the onus of proof. So Section 2 is to provide cover for liability, to provide cover to indemnify the insured. It is not for the third party to claim directly under the policy. Okay, the third party claim against the insured, and the insurance company, insurer, indemnify the insured. Okay, understand? But sometimes underwriters, stand in the shoes of the insured to handle the third-party claim directly. And this is the right of the insurers under an insurance policy. So sometimes, for example, if you have a motor policy, there's a traffic accident, and the third party, that is maybe the vehicle in front, claim against you as the owner of the car behind, which hits the car in front. Under the policy, the owner of the car behind has to pay the claim for the damaged car owner in front first, before the insurance company will pay back the sum to the car owner behind. But in the day-to-day operation, underwriters will take over the case and then to deal with the third-party car owner directly. So again, we talk about what is covered. The policy covered only the liability at law, at common law. Okay, not any contractual liability. Okay.
How about the tort of negligence?
Negligence is common law of tort.
So if it's caused by the...
Yes, it's common law.
So it's not covered?
Yes, it's covered.
It's covered.
It is part of the common law, the system. Negligence is tortious liability.
Yeah.
This is under laws of tort.
It's also covered by CSR?
Yes, of course. Yes. So how about injury to employees or the workers at site? Is it covered? No. It is one of the exclusion under the contractor or risk policy, because workers at site,
It's not covered.
it is compulsory insurance to be covered under the employees' compensation insurance policy. Okay, so to avoid any duplication, therefore the CR policy has the exclusion to exclude injury to workers. Contractual indemnity, is it covered? No. I just mentioned it's no. How about if the owner, if it is the owner is NTRC, the loss of revenue, is it covered by contractor or risk policy? No. But if it is caused by an accident, there's another insurance which may provide cover for this kind of loss of revenue, the so-called or what we call ALOP, Advanced Loss of Profit Insurance. Okay, so what I can recall is only one policy under the government projects has effect this ALOP insurance, which is the new airport project. Okay, and it is the only policy arranged, as far as government contract is concerned. Delay penalty? No. This is what I said, liquidated damages. No, it is not covered. Penalty and fines? No.
Because they are not common law.
It is in fact against public policy because you are against, because for fines, normally you are in breach of some statutory requirement or some legislation, and then you are asked to pay some fines. And then if you are insured, if fines can be insured, it will be against public policy. There's you can breach the law anytime, right? And then you are covered by the insurance, so it is not allowed. I'm sorry, my voice is not so.
Now, here is simple. You may not look at that. I just want to say a few words. An insurance contract is a commercial document. It's a contract. By a contract, we mean it is legally enforceable in a law of court. If you are a party to a contract, you feel you are not properly treated by insurers, you can always take that contract to the court to determine. So this is a very important contract. So knowing the format of our insurance policy is important. I try to use common man's language. Our insurance contract is a promise. If certain thing happens, you suffer from some financial loss, I pay you back. Now, very important, all insurer, how glamorous their advertisement are, we are only talking about money. Loss of trademark, loss of reputation, you suffer legal, This is not the subject. Theoretically, in the most cruel situation, if you take out a CL insurance, the limit of indemnity is 100 million, but you sustain a terrible loss, so many people are killed. Theoretically, insurer's liability to you is to pay 100 million and walk away from you. So you are left there to handle the rest. Legal cases, people protesting outside your company. So the worst thing to say is, no problem, we are insured. Because a CA outlaw, I use some body language. Your liability under a construction is that big. Okay? A CL insurance only covers you that part. It's not back to all your liability. Please understand. So in order to understand our insurance policy, because I'm a little bit biased to say that the British, one of the major good institutions left behind is the common law system. So even today, people are more open to do business with common law contract countries. So full stop, I'm not going to sell British anymore. But If you look at a CL insurance, it's so many conditions. How can I understand? First, look at the operative cost. The operative cost is the promise. If you have an event, you suffer from financial loss, I pay you, blah, 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 blah. The conditions are. So these conditions are not there to try to cut your cover. They put in conditions and exclusions repeatedly only to make you understand what their promise are. So if you look at an insurance policy, first thing to understand it is the operative cost. Then you know these operative costs are not endless, it's not unlimited. So in order to justify and make that operative cost more solid, because it will be enforced in a court of law, they mention conditions. So can you give me one conditions that this legal promise would not happen? Simple, common sense. If you take out an insurance policy, you don't pay premium, that policy cannot be effective. It's a matter of common sense. So one of the conditions would be premium payment conditions. Okay? There's no such thing as a free lunch. So I'm not trying to spend too much time here. I just want to say that even now, any policy is a legal promise. It pays for an accident that will cause you financial loss. But even on this general legal promise, there could be some small, what we call quantification to say this is not open-ended sort of promise. Even I promise you, if your project suffer from a physical loss, damage, if this is caused by a nuclear war, a certain missile from North Korea, we are not going to pay for that. Even this is physical loss or damage. Please understand, okay? If this is a terrorist attack, even though it is physical loss or damage, it's an insured event, but we got exceptions, something like that. So if you follow I'm sure in your latter part of your career, you will be, I think, entering into a contract and understanding a contract will be part of your future career. So if an insurance policy is simply like something like that, operative cost, blah, 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 blah. In your construction contract, you also got standard contract from institution, general condition. But if you want to amend it, you use special conditions, something like that. Okay, so the heart of the insurance policy is the operative cost. But in order to make the operative cost, the promise more clear, in what circumstances we can honor that promise, we need to look at some of the exceptions. So people say that, oh, there are so many pins in insurance policy, insurance are not reliable, don't trust insurance. This is a all wrong conception. All economy, all major project, all economic events, they will all require insurances. Okay. We know as to the theories, we almost finished. Any question here? Because we would like to talk use a little bit time on claims after knowing the general principle about insurances. And unfortunately, I'm not good at claims. Joe are you able? He may give you some example of case he handled before.
In fact, we haven't prepared any slides for claims. Okay, so in my previous career, I was a loss adjuster. Do you know what a loss adjuster is? Loss adjuster. Do you know? 空證行, you know that? It's a firm of adjuster, specialized in claims, appointed by insurers to handle claims on behalf of underwriters or insurers. Okay, I have been with loss adjuster firm for 20 years before moving to being a broker. Okay, so I handle quite a number of construction claims, be it under Section 1 or under Section 2. Section 1 is the works covering the physical damage of the contract works, and Section 2, third-party liability claims. Okay, so there's lots and lots of different kind of construction claims, all depending on whether it is a building contract, civil contract, you know. I'm talking about, you know, I just talked about the airport project. There are settlement of, you know, unforeseen settlement of unforeseen settlement within a reclamation site. Okay, this is one of losses. Even now, you know, there's in the bridge, the Zhuhai, Hong Kong, you know, Guangzhou, the Guangzhou, the bridge.
Macau, Zhuhai, Hong Kong.
Macau, Zhuhai.
Go down for Macau, sorry.
So he's the head of Macau, okay, dealing also the construction works. Yeah. So the normal building losses, the building construction site losses are fire loss. Okay, I handle quite a number of big fire loss in construction sites. Normally this is caused by, you know, the causation of the fire in sites. Cigarettes, yes. Normally it's caused by, you know, the disposal of cigarette ends, and then it causes a big fire. For example, there's the building site developed by Cheung Kong in Ma Wan Shan. You know, they're causing the damage to two buildings. At least at that time, you know, the fitting of works was in progress. All the kitchen cabinets have been fitted, lifts have been fitted, pending the final finishing. And then this is just no building to be occupied. So what's damaged? Lift, building structure, fitting out works, fire equipment, fire service equipment. This is not pressurized at the time. Even though there's fire spring, no fire sprinkler, fire hydrant, but this is what it is not. What it was not yet in operation, so it's damaged. Okay. So you know there's fire pump in the buildings while being constructed. Yeah. So, but the fire pump was not not in operation. You know, there's something wrong. Okay. So two buildings was seriously damaged. So how to deal with a claim then? If you're an insurer, go to the site. Any QS here? You're not in QS, not quantity surveyors. No QS here. Normally QS done that, right? QS do the quantification. You know, a loss adjuster is also, you know, doing something similar to a QS to quantify the damage. Okay, but more than a quantity surveyor is to assess the extent of damage, whether it is repairable or not repairable. If it is not repairable, what will be the repair cost? If it's not repairable, what will be the replacement cost? Okay. And then check against the BQ. If there is one, okay. Nowadays, you know, some of the contracts are lump sum contract. There's no BQ there, right? So if there's a BQ, check against the BQ because the BQ forms the contract sum, and this is the limit of it is the limit that is payable for that damaged item. For example, the cabinet, the kitchen cabinet. The BQ say, you know, kitchen cabinet is $20,000. But if you replace it, maybe at the time of the replacement it's $30,000, right? Because of inflation. Even though it is $30,000, because the BQ limit the value, because the sum insured based on the contract sum is also based on the BQ. So the maximum payable under the policy is $20,000. Okay. So assessing the quantum of the loss, assessing the cost of the loss, form the basis of the adjustment. And then what the insurers or loss adjuster will do is to look at other terms of the policy, whether there is any excess. You know what I mean by excess? Yes, yeah, you have experience, insurance experience. Deductible. Excess, policy excess is in Chinese is 墊底費自付額. That is the first amount of the loss which the insured has to bear by himself. This is excess. Okay, if there's a fire excess, that means that each and every fire claim, the insured has to bear that fire excess. Maybe it is $10,000, $100,000, all depends on the agreement under the policy. Okay, sometimes in recent years, the policy excess tends to be huge in order to lower the premium cost. Okay, the contractor or maybe the owner has to bear, for each and every claims, bear a substantial amount of money. This is why one of the reasons why there's a substantial deductible excess is to have the insured party aware of the risks themselves, so that they, in the event of a loss, they have to co-insure the incident. And in order to avoid the payment of the excess, they have to improve the risk as such. Okay? This is one of the objectives for insurers to incorporate a huge excess under the policy. Of course, with a huge excess, the premium will be much lower. This is another objective. Okay. So in Hong Kong, fire loss, building loss, typhoon loss. Okay, there's a lot of typhoon losses in the past, not in recent 10 years. Okay, in the past, I don't know whether Typhoon York, Typhoon York or Typhoon Sam, it is 3 consecutive typhoon more than 10 years ago in 3 years. So at that time, all insurance suffer lots of losses, and loss adjuster make a lot of money. Okay, so during typhoon loss, what usually will damage in the building site? Plant and machinery. What plant will be damaged? Normally will be tower cranes. Okay, collapse of tower cranes, I don't know whether you heard about it before. Not in this recent 10 years. In the past, every year there will be a collapse of tower crane due to typhoon. Okay. So the mechanism of tower crane? Okay, so normally if a typhoon approaching, you have to put it in neutral gear, let the tower crane to swing freely, right? Yes, but sometimes when the typhoon came, this is after the construction work hours, they just not in the neutral gear, then when the typhoon hits, collapse. But is this insurable under the policy? John just mentioned plant machinery.
We have to make a distinction. The tower can itself may not be covered, but the subsequent damage to the contract work
is
covered. Is the subject of the insurance.
Yes, it is under the liability section. The
or section 1 also, if the tower can
cause the damage to the works,
the project itself is still covered.
It's still covered, yes. Understand, very complicated, I have insurance education in 3 years, and I try to complete it within half an hour. Okay. So tower crane is insurable, separately under machinery all risk policy, not a construction all risk. So normally there must be insurance cover because the tower crane is one of the most expensive equipment on the site. Okay. So during typhoon loss, other than plant machinery, normally the formwork, the temporary works. Okay, the formwork collapsed. If the reinforcement has been fit, the reinforcement bars has been already set, collapse of reinforcements bar, water damage, particularly to those equipment which has already been fitted. Sometimes the pump rooms, sometimes the electrical installations. Again, the assessment of losses is again If there's a BQ, look at the BQ, look at the extent of damage, whether it is repairable, how much will be the repair cost. Okay, again, for just like the fire loss, assess the loss, whether there's any deductible applicable. For formwork, scaffolding, the deductible is very high. Normally it's 50% of the damage. So every claim on formwork and scaffolding, the insured contractor has to pay half of it by themselves. Okay. So third-party liability under Section 2. Just mentioned about the case in Tsuen Wan, and there may be other losses like settlement. My experience on Western Corridor is many years ago. It's have been open. You know how many years I've been in the industry. Western Corridor, you know which one? 西九龍走廊, not the new one, the one inside. I handled the CR claims at that time, so you can imagine how long I've been in the industry. Yeah. So there's a lot of settlements causing the settlement of the road in front of all the shops, prohibiting the customer, or causing nuisance for the customers to go to the shop for business. And the nuisance, so I'm talking about nuisance. Nuisance is also lots of tort, so it's insurable under them. Okay. So the losses we have to for underwriters, they have to assess from the time of the occurrence, and then to up to the time when the settlement has been put back to its normal condition. What is the loss, financial loss of the shops? Okay, this is a huge exercise, and a huge sum of money have been paid under Section 2, the liability section of the policy. Okay, this is nuisance. What you mentioned about the fallen object from the site, most of it is because of negligence, lack of actions to secure the property properly, so allowing it to fall from the site, causing body injury. Okay, so insurers will also send investigator to the site, or may not send the investigator to the site, because for this kind of incidents, normally a lot of government authority will be attending the site, including Labour Department, okay, including the police, sometimes the firemen, sometimes E&M department, or just for the case. This is not a CR case. This is a liability case in Long Ho Fong, Lincoln Place. Okay, so Otis has the insurance cover for sure. So it is insured by Chubb Insurance. If you know Chubb Insurance, okay. So, and this is an excess layer. If I'm talking about the Chubb insured over this maybe 20 million, or another excess layer from 20 million up to a certain limit. So this is the insurance operation. I will not mention that. I will not go through it more. So for body injury, normally this is on negligence. Fail to do this, fail to do that, causing the something happen, and then causing body injury, third-party body injury, or third-party property damage. The assessment is according to the law. Okay, the law is common law, and this is a precedent. According to precedent, for example, for body injury, we have to look at previous judgment. For example, for injury of an arm, okay, loss of an arm, before, maybe prior case, the loss of arm may, the judge may settle it, or order a judgment for the payment of $1 million Hong Kong dollars. Okay. So if insurance company sometimes will not engage legal advisors to do the case, they will assess the claim by themselves. So they will pull out the judgment, previous judgment, with similar injury, and then calculate to consider also the inflation to assess how much will it be if the case is judged today. Okay, the case is being tried in the court today. So and then offer the sum to the third party whether it's agreed or not. If it's not agreeable, court. Okay. In fact, it's not go to court. This is a lot. Some legal requirement, for example, for arbitration. Nowadays, the court will promote arbitration or mediation before litigation. So all cases go to the court has to be mediated before it is allowed to go directly to court. Okay. So it's the handling of the third party cases. Any other cases you want to know how to be dealt with? You can imagine what kind of losses in a construction site. I can, if I have the experience, I can tell you how to handle it.
Is there any time bar for the filing of claim or incident report?
Okay. In Hong Kong, there's a limitation ordinance. You heard about it?
Yes.
Limitation ordinance. Okay. Limitation ordinance in Hong Kong allowed the claim to be lodged at court, to submit at court. Okay, for body injury, it is 3 years from the time of the accident. Okay, within 3 years, if the case cannot be resolved outside court, you have to issue a writ of summons within 3 years. Okay, and then after the issuance of the writ, you have 1 year to serve it. So a total of 4 years. Okay. So after 3 years, if you're not going to issue a writ, then it is barred. Okay. For property damage, it is 6 years. Okay. So if it is combined third-party body injury and property damage, it's still 3 years. It does not apply to minors, this limitation. The you know what is minors? Kids, babies, person below 18 years old. It does not apply it. The limitation comes from the minors reaching the age of 18. Okay, so it is if the minor is injured at 3 years old, at the age of 3 years old, the limitation applies when he or she reached the age of 18. And then from 18, count 3 years. So if it's 21 years old, then it is barred. Okay? But always, there will be some legal representative representing children who is injured in the incident. Okay? And if any settlement reaches has to be approved by the court for the benefit of the child. Okay, so if a parent sue against a third party for the benefit of the child, he or she cannot get the benefits or the payment for his own use, but it has to be set up some form of fund for the benefit of the children, to the child, to the kids, for the future development. Okay, so
This will override those conditions in the insurance. Whether it says 48 hours to file the incident.
no, there's no such a condition under the policy.
No.
The policy has a condition requiring the insured to report the claim as soon as possible. Okay, not within a definite period of time. So if the incident occurred, they know that, okay, report to insurer. There may not be any third-party claim, right? So you get the third-party person got injured. So you think it is your negligence, and then you report the claim to the insurance company, file a claim. Insurance, may do investigation of it. Okay, after investigation, put the result of the report in the file, and then wait for the third-party claims. They will not proactively ask the third party to claim in, right? So until 3 years, if there's no claim, they will close the file. But as an insured, the insured has a duty to report the claim into insurers as soon as possible.
So very subjective.
Yes.
As soon as possible.
Yes, because sometimes an accident happened causing an injury. The insured may have no idea, may have no reports from whoever, and not until the third party sends you a letter or making a complaint, you know about it. Maybe it will be maybe 2 months later, or even 2 years later, right? So how can I report a claim within 48 hours if I have no knowledge of the incident?
But let's say as a contractor, there's an incident happening on the site. You should have to report the incident.
Yes, yes, as soon as possible. Normally, what we said that if the time delay, maybe there's a delay, do not prejudice insurers' investigation, then normally insurers will accept it as is within the time period that is called as soon as possible. If after the incident, all evidence gone, underwriters would like to see what had happened, and then there's no information at all for insurance to do the investigation, then insurance will apply that condition that you have not reported the claim as soon as possible, and then decline the claim. Because there's no information to handle for them to consider how to handle the claim, right? So it is subjective, but it will be reasonable. Yeah. Any other questions? If not, then our presentation will be up to here.
Okay, thank you very much. Okay, are you sure there are no questions? Don't wait until the exam.
In fact, if you have questions, ask us through Dr. Mao.
Okay. I'll be charging you for that.
I will not charge you anyway.
I won't charge you too. I'll be charging them.
Okay, thank you for giving us the opportunity to do the presentation. If any of you would like to join the insurance industry, let us know, okay?
Would you like to tell them a little bit about your company?
Okay, now Jardine Lloyd Thompson, JLT, is one of the 4 major brokers in Hong Kong. What the insurance brokers do is to place or to give recommendation insurance advice to insured, acting as agent of the insured and not the insurer. We are agent of the insured, giving advice to insurance company, not insurance company, to the insured, how to arrange insurance, what the best cover available in the market, and seek support from insurance company to arrange the proper insurance for our clients. Okay, Jardine Lloyd Thompson is associate company of Jardine Matheson. You know Jardine Matheson?
Yeah.
Okay, Jardine Matheson is the holding company of Gammon. Yes. Good, you have good knowledge. Gammon, Hong Kong Land, Welcome Dairy Farm,
Jardine Engineering,
Jardine Engineering,
JEC,
Schindler Lift,
Mercedes.
Mercedes-Benz, no, Songfu. Okay, Songfu, not Mercedes-Benz. Songfu is the agent of Mercedes-Benz.
Owned by
Yes, Songfu is owned by Jardine, yeah. And also some other operation not in Hong Kong. Okay, Jardine Lloyd Thompson is one part of the Jardine Matheson Group. And the insurance operation of Jardine starts in Asia in 1863.
Shanghai.
In Shanghai, yes. So it's a very long history. Yeah. In Hong Kong, we have some 350 staff members, and handling with different divisions. I'm from the corporate divisions. Normally, no, I do not handle CR insurance, but because of my past experience. John is in our Macau office. So in our Macau office, it's a small office, so they are not specialized in different policies. So they handle all sorts of insurance, including CR, particularly recently in Macau, there's a boom, not these 2 years, okay? before these 2 years, there's a boom in construction industry. So there's lots of construction projects, lots of needs on the insurance cover. So yeah, we are also operating in Macau. Okay. So I just talk about our recent clients is in land for the recent development just announced yesterday. The third runway, the MTR Shatin Central project, and
Disneyland extension.
the Disneyland extension I just mentioned. They're quite big projects. Also the Sanatorium Hospital new extension,
Chinese University.
Chinese University extension.
Hospital facilities.
Hospital affiliate. He knows more than I, right? So in insurance brokers, we have different departments. We have specialized in construction or risk. I'm in the corporate division, doing all general insurance like employee compensation, property liability, product liability, insurances. Okay, we have a special division doing marine hull and marine hull. No marine hull. There's the ocean going ships. Okay, we have specialty dealing with cyber insurance. Anyone have any idea on the cyber insurance, or director and officers liability insurance and professional indemnity insurance? Yes, these are being dealt with by our specialty department. And we have a team dealing with life insurance, particularly on high net for this jumbo life insurance. So, and we also have a claim division handling all the claims on behalf of clients. So there's lots of opportunity in our company. Yeah. So if you are interested in insurance, which is very tough, I can tell you. Okay. you can approach us. Okay. This is not a career talk. Okay. So anything about construction insurance or any source of insurance, let us know through Dr. Mao. Okay. So thank you very
Once
much.
again.
So I know Dr. Mao will dispatch our presentation to you also, no need to copy anything.
Okay, thank you very much.
Thank you. Enjoy your study, okay?
Enjoy your examination. Thank you very much.
Thank you very much.
唔該晒，
唔該晒你。
再要嘅需要。好，唔該晒。